Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant, as always, my colleagues Sonia and Nigel joining me over the next 2.5 hours. Guys, good morning.
Morning.
Good morning.
Take a deep breath. We're starting a new week.
We are, and there's so much, right? There's so much news flow back and forth with the Adani Group stocks. I guess that's on one hand. On the other hand, earnings to react to. So a lot of data hitting you left, right and center. But we're here to negotiate all of that.
Absolutely. You know what? Did you guys play music in the morning when you any particular kind of music? I've started playing the the Rocky theme song.
How are you feeling today, Prashant? What side of the bed have you woken up from?
Prashant's feeling good.
It's you need you don't know what's coming your way, right?
Yeah.
Last week was any indication with all the three big events, right? And I think. Let's brace ourselves. This is perhaps a little calmer as compared to last week. Okay, let's quickly tell you what's lined up in terms of the trade setup, right? So the starting point is what is new. You had the US jobs report, which was a monster beat. The number came out, around market opening on Friday, US session, and it was a shockingly strong number. 500,000 job additions in the month of January. This was almost 3 times what was expected. You don't get beats like that very, very rarely. And we got that, right? So I think that is something which will continue to have implications going forward. I'll tell you why. Just a quick mention of the price reaction. So the US 10-year yield, which was gently drifting lower, got a bolt out of the blue. It was up 13 basis points. The NASDAQ lost 1.6%. Now, these are not massive. We've seen much larger moves. These are not massive moves. But the question this throws up is, the data and the price action throws up is that, what we were saying over the last week, Thursday and Friday, the market is in the US pricing in no recession, no hawkishness. Now, the jobs data, does it question the second, which is no hawkishness? Will this require more hawkishness from the Fed? Last Wednesday, the Fed chair, Jerome Powell, emphasized disinflation 10 times over in his sort of Q&A with the press conference after the FOMC meeting. And he did not push back against market pricing. What the data, with the jobs data shows is that, Fed rate cuts perhaps are far away. The market is pricing 2 rate cuts in the second half of 2023 this year. The Fed chair did not push back against it, and that's why we got a powerful rally in the US. The jobs number and the magnitude of the beat is basically saying that the labor data is very, very strong. And I know, there are revisions and there is seasonality to it, etc., but all of that given, the numbers are too strong. So will the Fed officials, and you've got a long lineup of speakers over this week, Fed speakers who will come on the tape and speak, will they push back against market pricing? Will they have to reconsider, and will markets take note? I think that's the big global cue which we need to pay attention to. The big data driver is the consumer price inflation number, which is on the 14th of February. So we don't know what that is going to be like, but that's just to put it on the table. That's the big data point. All right, let's come to here in India. Broader markets and the Nifty, for the first time, kind of got out from under the entire Adani news story on Friday. We got a decent, nice rally on the Nifty. The indices did well. Broader markets, you can kind of nitpick and say did not participate, and that's absolutely fine. But the Nifty, the Bank Nifty, and the larger names did really look beyond, of course, what has been the dominant kind of news story, which is this entire Adani story. And this is in line with the view that we've been presenting all the way over the last week, that eventually, but slowly and steadily, the broader market will move on, and the impact of any one news story fades. You don't react with the same amount of intensity every day after day after day. And I think on Friday we got some of the indication. I'm not saying the story itself is, is something which will not develop, but I think the impact on the broader market perhaps reduces. Just a few levels on the Nifty. On the way up, I think what bulls would want is a solid close above the 20-day moving average. That number stands at 17,897. So we'll see. It's not very far away. On the downside, I think it's the budget day low, which was 17,353, which I think if it's held, I think it's good news. On the Bank Nifty, on the way up, a close above the 20-day moving average of 41,822 is high. And on the way down, I mean, the budget on the day of the Bank Nifty on the day of the budget did not make a new low. So the previous low on the Bank Nifty, which we've detailed many times over, becomes the recent low, becomes something as a reference point, which should not be broken on the way down. So that's a quick kind of run through on the trade setup. The SGX, I think, is indicating an absolutely flattish, slightly lower kind of start. Guys, hi.
Hi, morning. I think there are two markets now, right? One, the Adani Group stocks and the kind of pressure that it has created. But on the other hand, the overall market is staging a bit of a comeback. So you've got to keep those two things separate. Of course, the overhang will remain of the Adani Group stocks. But then again, the market may also move on. And in that context, there are a lot of positive domestic cues lined up this morning. Across the results season, numbers have looked good in the last 48 hours, whether it's SBI, ITC, Tata Power, a lot of the smaller companies as well. In fact, SBI has seen its best asset quality in the last 2.5 years, highest ever quarterly profit. So big thumbs up over there. For ITC as well, in any case, after the overhang of the budget was out of the way, ITC was up and about. And then on top of that, strong earnings, cigarette volume growth of 15 to 16%. I haven't seen this kind in a very long time. And also a lot of brokerage upgrades as well. So these are two pillars of the market that will hold forth and make sure the market stays afloat. Tata Power reported very good profitability in their Indonesian coal business led by higher coal prices. So keep an eye out on that. If you look at the FI selling as well, yes, there was a sell figure, but it's much lower than what we saw in the preceding day. So we saw about 930 crores of selling compared to over 3,000 crores in the preceding day. So in that context, FI selling has also reduced, which is a good thing. Now, on the Adani Group stocks, of course, there could be more pressure there perhaps on individual names. But Uday Kotak had put out, this tweet, and I'm sure all of us have gone through it. But it just goes to show that there is perhaps no systemic risk to the Indian financial system, just quoting him verbatim. However, large Indian corporates relying on, global sources for debt and equity finance creates some kind of challenges and vulnerability. So on one hand, Adani Group stocks, some of the banks that have an exposure to it could maybe be a bit tentative. But on the other hand, flip side, there are positive cues that could offset that as well. In that context, since earnings are very strong, I'm watching out for a lot of the numbers this week. There's Tata Steel that comes out with numbers today. Tomorrow, there's Ambuja Cement, closely watched, of course, post the Adani fiasco. There's Bharti Airtel, Hero Moto. On Wednesday, a lot of smaller companies, Oberoi, Motherson, Shree Cement. On Friday of M&M. So once again, an earnings heavy week. But give and take everything, the domestic cues are not too bad. So, I'm looking for perhaps that budget day low to be held and some sort of a revival, at least in individual pockets which have news.
Well, that's right. Sonia, on Friday's trading session, what was encouraging was the Indian markets, they decoupled themselves a little bit from this Adani fiasco that's playing out. And you had domestic-facing themes that did well. Whether it was the auto space, whether it was the Nifty Bank, both of them did well. In fact, they put on good weight in Friday's trading session, and it was a good close. The question is, since ITC's numbers are good, and since the Nifty Bank, with a lot of clarification that's come out there, maybe it was overdone on the downside, can the ITC and the Nifty Bank, both of them outperform and take the markets higher? Now, that's going to be very, very important. Remember, the Nifty and the Nifty Bank, they're at very, very key resistance levels, which we'll get to in just a bit. On the institutional side, as Sonia said, the FIs, well, they sold a little less, and the institutions, that's the DI and the FI, you put it together, well, they turn net buyers. So good news out there. On the futures and options space, there was clearly some short covering that did play out because the Nifty had a good rally, the Nifty Bank had a good rally, and open interest out there was down between 6 to around 8%, which perfectly ties in with what the FIs did in the FNO market. They covered close to around 26,000 short contracts, though the short positioning continues to remain elevated at around 81%. So some signs of some short covering taking place. In case things go wrong, they have put some cushion out there, so they bought some puts. But for me, the heartening aspect is the put writing is what we have seen after a very, very long time. And they wrote puts very, very aggressively. 10 puts is what they wrote for just one call. So that's the most encouraging data point for me in terms of, the index options data. What were they writing? 17,500 put, 17,600 put, and 17,700 put. Between them, there was 1 crore shares that were added out there. So aggressive writing is what we've seen. And the Nifty Bank as well, more than 10 lakh shares were added at around the 41,000 put. So that's giving you a sense that maybe the bulls, they believe that that base for the market has moved a little bit higher, at least in the near term. What are the levels you're looking at? The 20 as well as the 100 DMA and both the Nifty and the Nifty Bank. Though they are going to be the resistance levels. I'll tell you what, the base for the market from around that 17,350, going by the options data, the sense you get is maybe that's moved a little bit higher to around 17,550 just in the near term. SGX Nifty suggesting a flattish opening. I think if you see a deep downtick intraday, then maybe in fact a 100-point downtick or so, maybe then in fact risk reward could favor a buy with the stop loss at around 17,650. Let's see how this one goes.
All right, Nigel, so interesting data as always. Before we start, let's tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Dean Kim of William O'Neill and Company and Arvind Sanger of Geosphere Capital Management will join us to discuss the global setup. Later, our research team will bring you with CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 this morning, we'll do a fundamental stock check with Prakash Diwan. So that's the lineup here over the next 30.
Okay, well, we have lots to reckon with in terms of individual views as well. First up, as we kickstart the week, we have Chetan Seth of Nomura, who maintains that fundamental investors should use these stock market pullbacks as an opportunity to raise exposure to Asian stocks, where in addition to the broader themes of better global backdrop, an end of the Fed's tightening cycle, China reopening and a recovery theme, and a bottoming of the tech cycle in first half of FY23 are additional positive factors to look out for.
Well, let's get you some money market views as well. On the rupee, B. Prasanna of ICICI Bank says exceptionally strong job data in the US has dented hopes of moderation in inflation and an early end to the Fed hiking cycle, leading to higher US yields and a stronger dollar. He adds the Indian rupee, which was already under pressure from equity outflows, would suffer from the resurgence of the dollar's strength and trade with the depreciation bias. However, the RBI is expected to smoothen the volatility from a sharp move. For this week, Prasanna expects the rupee to trade in the range of between 82 to 83 to the dollar.
Okay, and on the bonds, V. Prasanna of ICICI Bank says global yields have inched higher on much stronger labour data in the US. Back home in India, bonds rallied sharply owing to a positive surprise on next year's borrowing numbers. Prasanna expects the yield to remain supported going into the MPC this week, where 25 basis points hike is expected and a pause thereafter. He expects the 10-year benchmark to trade in a range of 7.15 to 7.40% with a softening bias.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at SBI, ITC, Marico, Tata Power, Mahindra & Mahindra Finance, Interglobe Aviation, Paytm, as well as Dalmia Bharat. Well, they are stocks that are likely to react to positive news flow. While on the flip side, you have Manappuram and JK Cement. Well, they are stocks that could be on our radar on the back of some negative news flow.
Okay, well, let's get you some perspective. Our first guests joining us this week are Dean Kim, Head of Global Research Product at William O'Neill, and Arvind Sanger, Managing Partner at Geosphere Capital Management. Gentlemen, great to have both of you with us here. Thank you very much for your time. Arvind, if I can come to you first. The job addition data for January in the US was absolutely shocking, right? Shockingly strong, I should say. What does it mean for market assumptions, market pricing of what the Fed will do, etc.? Go on.
Yeah, we always worry when you get such a large outlier, what quirks there might be, what revisions there might be. We don't know yet, but there was an upward revision to the prior month's number. So clearly, something is going on in the job market, which is proving to be extremely resilient, despite the Fed's actions. And obviously, inflation has come down. But what has caused inflation to come down in the last few months, and we might continue to see it in the data coming out in a couple of weeks, is the goods inflation. Right, the goods inflation has come down. Even some of the real estate inflation has come down. But I think the big challenge for the Fed is to get the labor inflation not to prove to be stubborn. And I think that will prove to be the real question mark from this data, whether the Fed is going to have to engineer a bigger slowdown to get a handle on wage inflation, because that may remain one of the bigger problems for 23.
Okay. Arvind, I have to ask you before we move on to our next guest, what your take has been on this entire Adani Group fiasco. Do you think the market can move on irrespective of what happens with the Adani Group stocks, or do you think it's sort of a snowball effect into the rest of the market, especially the financials? How are you approaching it?
Well, look, we talked a little bit about this on the budget day itself, where I said what is most important for foreign investors, and I think for Indian investors, is to see a credible decent approach by the RBI and SEBI and others to make sure there's transparency in how they evaluate and how they assess. And so RBI has asked the banks to reveal what their exposure to the Adani Group is. So I think sunlight, as they say, is the best disinfectant. And clearly, I'm hoping we'll get more sunlight and more clarity. Clearly, when SBI says it's less than 1%, maybe 0.5% of their loan book. So it's not it's not systemic as Uday Kotak and others have already said. So I do believe that the Indian growth story is not an Adani growth story. So therefore, wrapping the Indian growth story around Adani and their admittedly significant infrastructure spending is a mistake. But I think there will be some challenges because they are a very important part of the infrastructure. So we need to make sure from an India growth story that the other engines are all firing and there's complete clarity on what the government will do regarding making sure that anything that needs to come to light comes to light. So I think there are some challenges, but I don't think they're systemic challenges, and there are plenty of good companies and good managements that we can invest in.
Well, that's heartening to hear. Arvind got that point, but let's get in Dean Kim as well into the conversation. Hi, Dean. Morning. In the last week or so, we have a couple of big events that took place. One is the budget 2023, which was pro-growth, which is good news. And the other was the entire Adani fiasco that's playing out. Your view on the Indian markets, keeping both these two in mind, and you don't, you never shy away from levels you're looking at on the Nifty. So what's the range? What are the levels you're looking at on the Nifty?
Yeah, so I think, Mr. Sanger is completely correct. I mean, you can't see Adani as part of the Indian story. And in fact, when I look at some of the banks like ICICI Bank is making a recovery, State Bank of India as well. I think, the volumes that came in the last couple of days was very strong for these names. And that gives pretty good hope that the market understands that the risk level in terms of bank loans is quite small. Now, in terms of the market, I look at the sensex, and we're currently sitting at 60,840 or so. Next support appears to be 58,700, which is 3% away. And but the resistance is quite close, 61,200 or the 50-day moving average. So I think we want to make sure that the market can overtake this resistance level. And I suppose as the Adani story plays out and everything is understood about that situation, I think the market has a chance to reclaim that 50-day moving average. So that's what we're looking for.
All right, Arvind, the S&P is up just under 10% this year. Nasdaq is up some 16% this year. Do you think still last week before we got this number, jobs number, the general thinking was that maybe this has got more to run from here. What is your sense? Will this data point put a stop to the rally we've been seeing in the US? Is Friday's price action a sign of things to come, which is down, not up?
Well, Friday's price action was actually quite interesting because the markets opened much weaker and got a little bit weaker in the morning and then gradually, ground higher and didn't close down that much. So I think there is still hope that the inflation data that comes will prove to be more benign, and this was an outlier number. It was such a shocker that maybe there was something off in it. So I think the market is still wanting to buy the dips rather than sell the rallies. I think time will tell. My sense is that the inflation numbers are headed in the right direction. The problem I have with the inflation data is not that it's not coming down, but that it may not come down to the levels that the market is hoping for, which would mean Fed is starting to cut interest rates towards the end of the year. So I think that remains the big question. But in the short term, I think we're not going to see sharp sell-offs, but I think we may remain range-bound till we get the next inflation data in a few days. And then after that, I think we'll continue to be data-dependent. But my sense is the markets were hugely oversold. They've had a big bounce. They have a little more to go. But at some point here, we need to see confirmation, maybe by the end of the month or early next month, that employment is slowing down. And obviously, Friday's data was shockingly bad for that hope. We'll have to wait and watch what other data points give us some hope that employment is slowing down, because unless the job market slows down, any inflation, coming down structurally, meaningfully is a pipe dream.
Okay, one final question from my end then. Dean, this is for you. You mentioned briefly that ICICI Bank and SBI are holding up quite well and there seems to be an upside there. What about ITC? A lot of brokerages have raised their target prices post the good earnings that came through. Are you seeing that on the charts as well?
Yeah, if you're speaking about IT related companies like Infosys or
No, I'm talking about ITC. If you track
okay,
that.
the tobacco company, yeah.
Tobacco company, yes.
Yeah. The chart looks really good. It's broken out from a base, and that's the first thing I noticed when I was doing some, reviews. I think the stock is ready to break out and outperform from here. So it looks like it's ready to go.
Go for a while, right? It's been a 60% rally in the last 12 months. Dean and Arvind, thanks a lot for joining in and giving us your quick take on the market and what to expect from the big events that are perhaps lined up. Let's slip into a quick break. On the other side of the break, we'll get you all the stocks that you need to watch out for as we head into trade this morning. Well, I hope you're having a good morning so far. We have plenty of stocks to track, so without wasting any time, let's get straight to it. Our entire research team is joining in to help us prep for the day. So let's welcome them on board. Okay, we have 2 Mangalams there instead of 1. Great. But let's go across to Abhishek first up. Abhishek, SBI is on your radar. Good set of numbers.
Well, strong set of numbers coming in, Sonia. Look at the profit number. That's the highest quarterly profit that SBI has ever reported. ROA continues to remain above 1% on a second quarterly basis. So management has said that it will remain above 1% in the near term. The net interest margin is at 29, quarter high of 3.5%. Cost to income ratio or the operating efficiency is one of the best in last 23 quarters. Asset quality, they are the best in last 7 years or even more. Both the gross NPA ratio and the net NPA ratio. Annualized credit cost is at a mere 0.2% or 20 basis point. So strong operating profit growth of about 35.5% YOY and about 19% sequentially. The treasury profits have bounced back this time around versus the loss that they had in the previous quarter. CD ratio or credit deposit ratio, that's the best in 11 quarters. On the flip side, the deposit momentum is weak, growing at just 0.6% quarter on quarter, and the fee income has also remained weak for second quarter in a row. PNL, both the NII and PAT is ahead of our poll. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Mangalam. Mangalam, ITC, those numbers look red hot.
They look smoking hot, Nigel. They have a product called Double Burst. And these numbers are exactly that. For ITC, the first burst came when the budget tax hike was lower than expected. And this second burst is the stellar set that the company has reported, exceeds expectations across all parameters. In fact, the cigarette volume growth at 15 to 16% is much higher than our estimate and the street's estimate of anywhere between 8 to 11 odd percent as well. The revenue mildly lower than expectations, but that was largely because of the weakness that we saw in their agri business, and that was understandable because of a high base and there were restrictions on exports of wheat and rice products. But here's where the good numbers came in. EBITDA 6,200 crores. We were working with a number just shy of 6,000 crores and net profit over 5,000 crores. The cigarette business showed a revenue growth of 17%. We were working with a number of 12 to 13%. FMCG, 18.5% growth. The margins expanded out there as well. The hotels business, a great set coming in out there as well. 50% jump in their revenues, near tripling of their EBITDA. And we had the paper business, which showed about 12.5% growth in their revenues. So across all parameters, it was good numbers. The stock is at a record high post-budget, expected to continue to be higher. And to add to all of that, they've also announced a 6 rupee dividend, so that acts as a bit of a sweetener.
I thought it was a pizza called Double Burst, right? A double cheese burst or something. There's a Double Burst cigarette.
Yes. And for someone who doesn't smoke like Mangalam, he knows quite a bit.
He's well informed.
I don't know whether he's doing it on the quiet.
Post Friday, quick drag. All right, Mangalam, what about Marico? What's the highlight there?
Well, for Marico, the numbers were absolutely in line with expectations. And these expectations, again, were set by the company itself when they gave the third quarter preview. So if you just take a look at their revenues, absolutely in line with expectations. We had the EBITDA as well, largely, as Street was expecting, 456 crores versus 450 odd crores. And the net profit, 333 crores versus 317 crores. So you'd wonder why after revenue and the EBITDA meet, the net profit was slightly higher, because the other income came in at 40 crores versus 22 crores. Stripped of that, again, in line. Parachute rigids grew by about 2% in volumes. value-added hair oils, that's where the problem is because consumer sentiment is weak. So we saw a revenue decline of 3%, but Saffola does well for them. They guide for their EBITDA margin to be in that 18 to 19% band for this year, with a medium-term revenue guidance of 13 to 15%, led by 8 to 10% volume growth. So in-line set of numbers, the improvement in sentiment should aid the stock. See mild green out there. And on the cigarettes front, I have to tell you, those who don't smoke actually read the packages, which is why I know a little more.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Abhishek. He is tracking a whole host of companies who reported their numbers. Abhishek, go ahead.
Well, to begin with M&M Finance, they reported January business momentum, which was weak along with the Q3 results. So Jan disbursements are at 5-month low of 4,000 crore, down about 14% month-on-month. Collection efficiency in Jan is down to 95% versus 98% in December. For Q3, the total disbursements were up 22.5% quarter-on-quarter, which led to strong AUM growth this time around, coming in at close to 17% YOY and about 4.8% sequentially. However, they have felt the pressure on the cost front as they borrow more from banks, and we have seen banks increasing their lending rates. So the spreads are at 7.4% versus 7.5% for the H1. So spreads have declined due to pressure of cost of funds. Asset quality, gross NPA ratio is at 15-quarter low, and net NPA ratio is at the lowest in last 8 years or even more. PNL, both the NII and PAT is a beat on our poll. Manappuram Finance, they are losing the gold portfolio to banks. We had covered in Fin Street that banks are getting very aggressive in gold financing business and taking away the market share from NBFCs. So gold loan share is now at 58.4% versus 62.6% in the previous quarter. Gold tonnage is at 6-quarter low, or the second lowest in last 21 quarters. That has also had an impact on the AUM growth, which is the slowest in last 6 quarters. AUM growth is a little below 5% on a YOY basis. Gold loans are down 9% YOY and about 3% sequentially. Calculation shows that net interest margin might have declined on a sequential basis as well. And up 20.5% YOY, but a decline of nearly 2% quarter-on-quarter. Profits up 51.5%, but down about 12.5% quarter-on-quarter. The last one, Paytm, contribution margin of more than 50% has led to first time ever EBITDA being in black for the company. So the EBITDA is a positive figure of 31 crores this time around versus a loss of 393 crore on a YOY basis and about 166 crore on a sequential basis. The total income is up nearly 39.5% YOY and about 6.3% quarter-on-quarter. The net loss, that has declined both YOY and quarter-on-quarter. Back to you.
All right, thanks a lot for that. So that's on Paytm as well. We got that. But let's also keep our radar on Interglobe Aviation. Now, as we know, the entire aviation industry has recovered from the throes of the pandemic, and the numbers have been exceptional this time around because of a big pickup in air travel. Now, you've had a revenue growth of 61%. Of course, same time last year is not comparable, but nevertheless, these numbers are looking very good. It's an 11-fold rise in profits compared to what we saw same time last year. But even the internals have improved quite a bit. So all the metrics for profitability have gone up. The yield is up almost about 22% year-on-year. Load factors have improved. The RASK, which is the total income per available seat kilometer, that has gone up by almost 29%. But the only disappointment is that the debt is also up for Interglobe Aviation. So the debt is now, has gone up to almost 44,470 crores, which is a 26% rise in debt for Interglobe Aviation. So keep an eye out on that. But I'm going with green because overall the numbers are looking pretty good. Let's go across to Vivek. Tata Power's numbers also look quite decent this time around. Vivek, what's the fine print?
Well, absolutely right. Tata Power, good set of numbers. At least optically, it's a beat across the entire poll that we had. When you're talking about the net profitability, up almost 90% on a year-on-year basis. But let's delve a little bit deeper into it. Mainly, the profitability was aided by the strong performance as far as the Indonesian coal mining business, aided by higher coal prices. Also, this time around, positive, of course, is the fact that the renewable energy EPC margin has come back to the normalized range of 5 to 6% that the company had guided to earlier. Also important to keep in mind that the revenue of 430 crore was for the earlier period was actually booked in this particular quarter. This will not continue in Q4. Key takeaways from the con call that the management held, the Odisha distribution business AT&C losses have come down quite significantly. That's a positive. And also when you're talking about the solar energy order pipeline, it's quite strong. Almost 15,440 crore worth of order book and 3.9 gigawatt worth of orders in the pipeline. Lastly, the key monitorable and most important thing to track, the management has said that the Mundra power plant long-term PPAs are most likely going to come into play soon, and that continues to remain the key monitorable as far as Tata Power is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's talk about a couple of cement names. And Dalmia Bharat, well, those numbers look very, very good. The stock ended higher in Friday's trading session, but it should get a thumbs up even today. Revenue growth was solid. And keep in mind that they have exposure to East as well as South India. And pricing in East was far better than the rest of the country. So they gained on that front as well. The margins improved to around 19% odd. And that's despite the fact that power and fuel costs shot up by close to around 44%. On an EBITDA per ton, well, it came in at more than 1,000 rupees, which is a good improvement on a sequential basis as well as on a year-on-year basis. And it was backed by higher volumes. Volumes were up by close to 10%. Besides good numbers, they also announced that they've gone ahead and bought 5 million tons from the JP Group. Remember, they already announced this in December. But now, in fact, they've taken part of that agreement forward. It was close to 10 million tons. They've taken close to around 5 million tons. Integrated unit for captive power as well. Enterprise value from 3,230, which works out to an EV per ton of around $75 per ton. So positive on Dalmia. Unfortunately, on JK Cement, well, you expect the stock to open up in the red. There was good revenue growth, but that's where the good news ends because margins did get compressed to around 10% odd, and they're struggling on the cost parameter. Both power and fuel costs as well as freight costs they remain elevated, and the profit number is much lower. That's because, in fact, the finance cost has moved up since they've commissioned a couple of units. Depreciation as well as high, so expecting that stock to open up in the red.
Okay, so lots of stocks in focus this morning, and here's a quick recap in case you missed out on any of them. Stocks with positive news flow: there's SBI, ITC, Marico, Tata Power, M&M Finance, Interglobe Aviation, Paytm, and Dalmia Bharat. While stocks with negative news flow today: Manappuram Finance and JK Cement. Plenty of other stocks on our list, but we take that forward on the other side of the break. So let's take a quick break. We'll be joined by Anuj Khanna Soham, the founder, chairman, and CEO at AF.
Okay, welcome back. Things are looking hopefully a little better as compared to the bulk of last week as we begin another week. SGX is indicating a flat, absolutely flat start, 22 odd points lower. So let's get this going with some commentary on markets. Prakash Diwan is joining us now. Prakash, good to have you with us here. Thank you very much for your time. I hope your arm is healing well and you're doing better. I just wanted a quick word, Prakash, on the numbers from banks, right? We got SBI and we got Bank of Baroda on Friday. Bank of Baroda, by the way, has got an upgrade from CLSA. I think came out over the weekend. What does it mean for stocks in the PSU bank space from here out?
Yeah, good morning, Prashant. So I think very clearly the bank numbers for this quarter will start reinforcing the fact that the change that we saw in the trajectory for most of these banks in terms of growth post that cleanup with a long 3-4 years of NPA cycle cleanup, that is started getting into a little bit of a next phase of growth, which is typically, which should be, it sounds a bit too outlandish, but it's hyper growth. So if the economy is going to be the way what the budget has indicated, and if GDP estimates are to be, attained, most of these frontline banks, especially the PSUs, will be able to participate in credit growth, which is phenomenal. So, and if they continue to be in the mid-teens, which these numbers tell you that they're inching towards, the ROAs will follow. And if the ROAs continue to be at a sustained levels for such large balance sheets like the types of SBI and even BOB now, I think you'll probably start seeing a little bit of a re-rating for these banks in terms of price to book multiples. The price to book multiples for most of these banks had one round of re-rating. These numbers tell you that if there is sustenance on some of these metrics, there is no reason why the price to book cannot go up 20-25% from here. So I'm just talking about the multiple change. So the earnings have told you that there is improvement in EPS, there is improvement in book value. The balance sheets are much stronger, probably the healthiest ever we've seen in the last 8-10 years. So it is very clear that the bank PSU lot is, the PSU bank lot is something that you have to have participation in. But again, I'm repeating, you need to participate through a more holistic or a broad-based basket approach. Take an ETF if that works for you, if you're okay with it, comes at low cost, is much more simpler. Don't have to keep guessing which is the next bank which is going to do well. But I think you should, these numbers tell you that there is definitely secular growth that's coming at least for the next 4 quarters.
On ITC, Prakash, good morning, by the way, and hope you get well soon. I can see that little, thing going on there on your arm. I hope you get well soon. You know, you've got ITC, which has given you good numbers this time, but a lot of it perhaps in the price, right? I mean, in the last 12 months, the stock is up over 65%. You think most of the money has been made, or is there more upside?
Good morning, Sonia. Thank you. Yes, you can see the sling partly, I'm sure.
Yeah.
ITC is actually played catch up on what it deserves to from all those other businesses that have done well. I don't think everything is yet priced in. I mean, I'm a big fan of this company, of this business for the sheer size that it kind of straddles. Cigarette volumes was a bit of a concern for the last many quarters. And again, those quarters will resurface at some point in time when the government starts dipping into the potential tax kitty for cigarettes. But remember, the December quarter typically also has a bit of backfilling. So that's where the volume growth is there. But their new introductions are towards more premium products. And I did catch a bit of your conversation with Mangalam when you're pulling his leg from being a non-smoker. He knows so much about those double bursts. But then that's exactly the way the younger generation is going. I mean, people are looking at far more superior products. They're willing to pay higher. And that's premiumization in the cigarette space as well, right? So ITC actually benefits from that because they tend to be in a very profitable niche, which nobody else has been able to challenge. But even the Godfrey Phillips numbers were pretty encouraging in that sense from a volume growth perspective. So that's on the cigarette business. But you've not factored in the kind of growth they've made, the strides they've made in their hotels business, their paper business, and of course, a lot of stuff that's happening below the line in terms of the FMCG product mix. All of that is yet to come in. So I'm not saying that they've already done growth and the price doesn't reflect that. The price does reflect a lot of promise of growth. So the PEG ratio for ITC, to be honest, Sonia, is what attracts me. And that is something which would probably re-rate the stock going forward. And you continue to get a very good dividend yield as well, at least about 4-5% given the cash that it generates. So you can't let it down. I mean, it won't let you down, and you can't kind of not have it in the portfolio for sure.
Okay, all right.
And as a matter of disclosure, I do have.
Okay, Prakash, thanks for that. Well, I request you to hold on, Prakash, and maybe you could listen to this conversation we're going to have with Affle India. Remember, the past quarter is a little bit disappointing as it came in a little lower than what the street was working with. The revenue growth has slowed down to around 11%. With the exports contribute, close to around 65% of their business, that's been muted for the past few quarters. To understand what went on in the quarter, what's the way ahead, we're joined by Mr. Anuj Khanna Soham, the founder, chairman and CEO of the company. Hi, Anuj. Good morning. Always good speaking to you. Well, you're still growing, but at a slower clip. The growth was close to around 11% odd. We are used to seeing the 25-30% odd, and that's what you have aimed for as well. Could you tell us, why did the growth slow down? Do you expect to get back to the mid-20s in the coming quarter? And also, exports, they haven't really moved. It's been in that vicinity of around 240, 250 crores for the last 3 quarters or so. Is there some pricing pressure? Are you observing that some of the clients are pulling back on the spends?
Hi, good morning. Well, first of all, I think the results have to be seen in the context of not just one quarter, but let's say if you see it for this financial year, for the 9-month basis, the revenue, EBITDA and PAT growth year on year has been well over 40%. And I think that is quite a good way to enter into 2023. So 2022 overall as a year was a tough year. The 3 quarters, when you look at it together, I think Apple has delivered great growth overall. When we look at this, the immediate last quarter, Q3, we've got to see the numbers. Let's start with India first, which is our biggest market, which is approximately 35% of our revenue. There we have grown well around 23% plus in terms of year-on-year basis. And I think that's in line with what we have always guided towards. When we look at a broader set of our business, which is global emerging markets, when you talk about exports beyond India, 80% of our total business comes from, let's say, global emerging markets. And even there, the year-on-year growth trend on revenue is about 23%, right? Then we look at the total business. You say, okay, what's happening in developed markets? Clearly, there are headwinds. Clearly, there are macroeconomic factors. US and Europe markets have been impacted, and we've guided towards that in the last several quarters discourse as well, that there is headwinds and pressure in developed markets. And in emerging markets, anchored out of India, we are consistently delivering resilient growth, even with respect to the headwinds that are clearly there, even in some of the emerging markets. Now, while the overall growth, numbers that you talked about was about 11% year on year, but when we look at the total emerging markets growth, India as well as global markets, exports included, that's about 23%. So it's a pretty resilient number. So the outlook for 23 remains also very favorable, because we are hoping that in developed markets, we have actually already found some key verticals where we can accelerate some more growth into 2023. And, the emerging markets, which is 80% of the business, is already quite resilient at 23% growth, even in the last quarter.
Sure, got that. But I'm sure you'll agree with me that, there is this whole funding winter that's expected to flow through for the rest of the year because of, what's happening with new age startups, with the kind of layoffs that we're seeing. And some of them are your key clients as well. Do you foresee a slowdown in client spending through the course of the year? If yes, what is the kind of average growth that you see that's doable for the rest for FY24?
So I think even for this particular case, we have been qualitatively providing deeper insights into what kind of clients are we serving. And if you look at our earnings presentation, we have actually given 3 case studies of our customers. I think the first one is in e-commerce, like, the super apps, but they are owned by, large conglomerates. And, I think there's no funding constraint as such on that front. The second case study that we gave is for financial and banking. Not fintech or crypto, but are we talking about like banks, which are providing traditional, baseline financial inclusion services and so on. And I think that's, again, a case study of Indonesia for one of our bank customers there, which, again, is a resilient category. You're not expecting those guys to change their behavior based on external funding as such. And the third case study that we shared is about gaming, which is a global gaming company. Now, gaming, we believe, is a resilient vertical. Even in recessionary times, we think that gaming would continue to be resilient. And it's one of the verticals where we are actually undercalibrated at the moment. So the addressable market is large. It is a resilient vertical. And we think we'll find more growth in that vertical as we go along. So I think guidance going forward would continue to be that, let's look at 2 things. One, India will continue to grow north of 20%. Global emerging markets will continue to grow north of 20%. And while we are looking at finding faster, accelerated, more efficient growth in developed markets as well, one thing which is very clear is that AFL is grounded in bottom line sensibilities. Our margins, our profits have really expanded even in the 9 months that we've reported so far. The last quarter itself, our EBITDA is over 21%, our PAT is 17+%. And that has shown that, okay, while we are showing some challenges of headwinds only in the developed markets, but we are driving more efficiencies in our business across the board, delivering higher growth and profitability. And I think that is super important, right? So our goal is that next year, even if the revenue growth is, let's say, shy of 25%, can the profit and the EBITDA growth continue to be, in the 25% range? And I think that's what the management is working towards.
Okay, all right, Anuj, very quickly before we let you go, what is the margin outlook? That's improved, which is heartening. So what's the rough band you want to guide us to? And also, last time you were talking about some acquisition where you'll do a share swap agreement, right? By when do we hear about this, the finalization?
Well, we are still in, evaluation phase, because as we said, we took certain preparatory steps as we were entering into 2023. We think that given what's happening in the markets, we'll find attractive inorganic growth opportunities within this year. So we've taken certain, approvals so that we can anchor our negotiations appropriately. I think I can't give you any timing necessarily, but what I can say is that it's a good time to be out there in the market with the kind of strong balance sheet we have, and we will utilize the right currency. We still have a lot of cash, so we will first try to use that, and in the right deal structure, use some amount of equity sparingly and carefully in order to do the right deal structure. But overall, I think margin should continue to be, in the similar trends that we are seeing as we continue to grow. We will be bottom line sensible. We will be looking for margin expansion, or at least defending our margin position as we go through from a full year FY 2024 perspective, and certainly for the last quarter of this financial year.
All right, we'll leave it at that, Anuj. Thanks a lot for joining in, and all the best. It is a challenging year, definitely. especially from some of your clients, but I take it that you're managing it well. Let's take a quick break. Before we do that, let me tell you what's lined up in the next half hour of the show. At around 8:45, Anuj will be joining in for a quick trade setup. Post that, we will bring you the top stock picks for the day from our technical experts. We'll also bring you the latest updates on the Adani Group crisis and a discussion lined up with Hetal Dalal, the President and COO of IIAS. And before the market opens in CNBC-TV18 Stocks Board, we will highlight the top stocks to focus on for this. It's the start of a brand new week. How is it going to shape up? Anuj is joining in now for a quick trade setup. Anuj, looks like, you have the market on one hand, Adani Group stocks on the other hand. How do you think both of them are going to come together?
Well, Sonia, good morning. The phrase that I have in my mind this morning is smoking hot, because, everything is smoking hot right now. The jobs data, ITC's numbers, SBI's numbers, and news flow. So I think it's really just all over the place in terms of Qs balancing themselves out. Global Qs are weak, but local Qs are very strong. SBI numbers, ITC numbers, and the finance minister telling us that, there's no systemic sort of risk. I think all of this augurs well for the market. But the jobs data, I think that's something which is going to have a bit of an impact. You're already seeing that play out in the way dollar index is behaving, and Brent crude is down. So I think this is a move which we captured on Friday as well. I think that this will continue. IT will see some profit taking, and I think banks will rally more. That could be that was the basic theme which played out last year and got arrested this year. But I think that's ready to resume now, because even on the Nifty IT, you've still not negated a major double top. Which is what we made in December. So I think on the Nifty now, you got a line in sand in terms of 17,405. But I think today there's no trade zone, because on the upside that level is 18,200. So it's a very large 800-point band. And I don't think any trader can sort of work in that kind of a band. The rally, if any, has to be led by the Bank Nifty plus FMCG. Those are the two pockets which should do well from here. And IT may not be, helping market much from here on. On the Bank Nifty, I think you've already recovered about 4% from the budget day lows, and it's a clear buy on dips trade now. The only issue is where do you keep your stop loss, because it's rallied almost 1,500 points in last couple of days. The next resistance is 41,600, and going by the Fibonacci retracement methods, around 42,000, and that is where the highest call build-up also is. So my sense is, if you see 42,000 on the screen, there will be some profit taking, because this is going to be a tough level to take out, even in a strong rally.
Okay, all right, Anuj, thanks a lot for joining and giving us a quick update. For the time being, we'll slip into a short break. When you come back, we'll get you pre-open rates. We'll also be joined and we'll connect with Hetal Dalal, President and COO of IIAS, to discuss the latest updates on the Adani Group.